Media's Mining Weekly is interviewing Sarah Kuijlaars, the CFO of the De Beers Group, which has just reported a superb set of 2021 financial results. Sarah, what in your view should be the main takeaways from these outstanding results?
So I think indeed it's a really proud day to us up to report this strong set of results. And I think it's worth putting it in context that a year ago when we spoke, I was reporting on behalf of a loss-making business. So it's a really strong turnaround, obviously spurred on by strong consumer demand, particularly in the US, but across the globe. And we've been able to respond to that by strong production across all our mining units.
And is the strong 2021 demand showing signs of persisting as we go into 2022?
Obviously, the whole world has had to respond to the COVID pandemic. And it was great to see that our consumers were choosing to spend their money on natural diamonds. And I think it was really connecting with people, the connection with their loved ones, and that enduring meaning with the uniqueness of natural diamonds. And I mentioned that US has come back very strongly, but also in China and India. I think going forward, we're seeing continued robust demand. I think clearly we won't have the same growth rates as we've seen in the past because 2021 was obviously above 2020, but also above 2019. But I think we are, we're confident that the natural diamonds have got enduring meaning with consumers, and that will continue into the future.
What do you think will be the key drivers of demand as we move forward?
I think we're well aware that as people come out of the pandemic, there continue to be a significant proportion of people that do have money in their pocket and are making choices about how to spend that disposable income and have chosen and continue to choose diamonds and diamond jewellery. We're aware that obviously during the pandemic there was less international travel. This will come back, but also pre-pandemic, there were significant consumers chose when they were travelling into Europe or travelling into New York, that was where they bought their diamonds. So we've seen the consumer choices adapt, and I think they'll continue to adapt going forwards.
And De Beers Group rough diamond production that totaled 32.3 million carats in 2021. Do you foresee a production increase this year?
Yeah, so 32.3 million was a really outstanding delivery by all our units. And I think, again, it's worth reflecting on this is during COVID time, yeah? So we've had to adapt day in, day out in ensuring that everyone that turns up in our mines is safe and can deliver their work safely. And also at the beginning of 2021, there were very heavy rains in Southern Africa, which led to a pretty slow start in our production. Going forward, we want to really build on that delivery. And our guidance going forward is in the same sort of bracket, so 30 to 33 million carats.
And we've spoken a lot about demand, but supply is continuing to look shy. Is this what contributed to 2021's higher prices, and to what extent?
Yeah, so we're all aware that it's a balance between supply and demand. And if we look back in history, of course, there used to be a considerable contribution from the Argyle mining in Australia, which is now shut down. So I think we're seeing supply on a flattish trajectory going forward. And I think we and other people in the industry are then really focused on how can we ensure that demand and demand growth is really sustainable.
And this supply stress, is it poised to continue for quite a time, do you think?
Well, obviously we're focusing on our production. And we're really focusing on how can we ensure that we've got operational excellence across all our mines. So really ensuring that every mine has got that a very stable production and that we manage to produce safely day in, day out.
And how much capital will De Beers Group be spending in 2022 and beyond? And is that growth capital or is it just replacement capital?
Yeah, so in 2021, we really stepped up our capex from 2020. So we spent 565 million. And looking forward, absolutely, we're ensuring that we invest across the value chain. The biggest chunks of that are indeed in the capital-intensive parts of the business. So we've got Venetia Underground, which is really reaching a critical phase, going on stream in early 2023. So the next 12 months is really critical for Venetia Underground. but also in Botswana in our joint venture, Debswana, really important investments extending the life of Zhaneng mine there. So those are the two principal ones, but we're also investing, as I say, across the value chain. We're investing more in exploration, also investing more in our brand and consumer markets, and then, of course, the whole digital backbone we continue to give a lot of attention.
And the production contributions of Botswana, South Africa, Namibia, they're all close to our hearts here. They were all up in 2021. What are your thoughts around the yields from these jurisdictions?
Yeah, so we obviously work in partnerships with the governments in those various countries, and it's a really long-term partnership. Yeah, so we continue to work with our partners to ensure that we deliver sustainably, which obviously supports the De Beers growth story, but absolutely provides really important jobs to the communities, and obviously a very healthy tax flow to those governments. So I think it's that message of sustainability. This is a long-term business. We've invested in a mine for decades, and that will be the trend, continuing trend going forwards.
And Canada's output was flat. Is that likely to change?
Yeah, no. So I think Ngatiakwe had a tough year in 2021, and they actually shut down because of COVID restrictions. It's obviously a smaller contribution to the broader portfolio, but a very important one. And we're really ensuring that the best of the De Beers and the Anglo technical knowledge is passed to that mine to get the best out of the mine in the coming years.
And De Beers Group has always been renowned for marketing. What return is De Beers Group getting for the $200 million a year it's spending on diamond marketing?
So indeed, we significantly ramped up our marketing spend in 2021. I think it's important to remember that some of that is supporting De Beers, and we introduced the De Beers master brand, so De Beers Jewelers, De Beers Forevermark, and some of the marketing campaigns for that. So I do, of course, building on that generation-old saying and bringing it up to, I think, connecting with the consumer of today. And we're also investing significant marketing dollars into the industry through our relationship with Natural Diamond Council. And I think both those legs of marketing will continue. And when you talk about return, of course, it comes back to how can we continue to generate a healthy revenue that supports all parts of the value chain.
And what is it that makes genuine diamonds continue to sparkle and live up to the long-standing "diamonds are forever" slogan?
No, absolutely. So natural diamonds, of course, are absolutely unique, and they have this really enduring connection. And it's great to see how the pent-up demand for weddings is coming through. And I think in addition to those more traditional uses of natural diamond, we're seeing much more consumer demand on omni-channels and also through self-gifting or self-purchasing. So it's great to see such a healthy demand for this great industry.
That was Creamer Media's Mining Weekly interviewing Sarah Kuijlaars, the CFO of the De Beers Group.